So, some of you might have been here before. I moderated the IoT panel this morning. My name is Robbie. I'm part of a company called Pirate. We do pretty unconventional tech events, mainly in Germany, friends with Infoshare, so I'm very excited to be here today. One of our conferences focuses very much on the whole sector of Fintech and Insurtech, and that's why I'm very excited to start the panel now. So, Insurtech, just a hype or here to stay is what we're going to discuss. And I think we have a good mix of people because we have Robin here, who's sort of representing the incumbents with experience in the insurance sector from a corporate perspective. We have Timo, who's an investor in the space, and we have Samir, who is actually running a startup that's trying to disrupt the space. So maybe we'll start by having each of you introduce yourself with just a sentence or two.
Well, thank you very much. I'm Robin. I have worked for large insurance companies and startups, so I know both sides of the story. And yeah, I'm most focused on project portfolios of digitalization or try to scale startups. And well, I will bring the insights of what is actually going on inside incumbents and what do they discuss and what is the situation there.
All right.
Yeah, thank you. I present a little bit the investor side. I'm an ND, an investor at Apeiron Investments. We do Fintech and Insurtech. And yeah, that's a little bit my field. If you guys make pictures and Twitter it, please use please use @Insurtech forum and tag me. Thanks, guys.
Cool. Hello. Basically, I've been working with startup companies for the past 10 years or so. From fintech to dating to e-commerce to health, etc. At the moment, I'm building a 100% digital, fully licensed, regulated European insurance carrier called One. Yeah.
All right. Let's start. I want to get a quick feeling of the audience. Let's start with a test question. Who here has insurance? All right, that should be everyone. Let's hope so. Who here is happy with their insurance? A little less. All right. So that already gives a hint into the direction of why things need to change or what needs to change. But let's start with that question. So if we look at the industry, why is there even a buzzword right now like Insurtech? What's going on in the industry? What needs to change?
Well, what's going on, I think, out of the perspective from incumbents, you can summarize it with winter is coming. I really believe winter is coming to the industry because incumbents had a too easy job for too long. And we have seen, and One is a great example of that, the rise of startup companies tackling the insurance industry. And I think for the incumbents, it should be an alarm signal, because it shows that they are obviously not capable of producing the digital products and services that customers demand. Yeah, that's why I think winter is coming, and I believe I would love to see a really dedicated push of incumbents to digitalize their organization, their technology, and their culture. But I see a little bit lack of that, so I believe the Insurtech startups have a great future.
Yeah, I will add some things because the question a little bit here is it a hype or is it no hype? And for me, it's definitely hype because the whole industry, what we see is a lack of innovation overall. Secondly, the user experience is pretty horrible. The third thing is it's a billion-dollar industry and there's a lot of money in the market that you can use to change a lot of things fundamentally.
All right, do you want to add something?
Yeah, I mean, I think when you look at the history of insurance, at least modern day, right, you have to go back to like 18-something with the Lloyd's of London, and it's one of the best business models that has ever existed in the history of humanity. It's almost a license to print money, right? We fear for our health, our futures, our safety, so therefore we put money in the middle. It's a wonderful idea because we protect each other. However, these guys make good money off that, but they realized they had loads of cash, just cash in the middle, just so much money. So they were like, why don't we invest this cash in the meantime? And they realized that they could make even more money from the money that we give them to protect us. And so now insurance companies got bigger and bigger and bigger, and they made so much money, and it got really fat cat, and they got investors. That was the worst thing that ever happened to an insurance company, was they got investors. So suddenly they need to hit certain targets, they need to make certain amounts of money. And then basically what you've got isn't a product that's community focused, that's about protecting your society. It's a business. It's pure and simple, an investment business. And then the internet happened, right? And you have whole new industries cropping up, as well as innovation within old industries. But when you look at the insurance industry, and this sounds dramatic, but it's not, the internet pretty much hasn't happened to it. Like, has not. Like, you can book an airplane ticket right now and fly today. You can get a taxi to come here. You can get food delivered here. You can get somebody to come here, collect your clothes, wash them, and bring them back to you using your mobile phone. But if you try and sign up to a new insurance, or you try and make a claim, or you try to adjust your premiums, or you try to do something with insurance, you're going to get a letter, a fax, a waiting period, phone calls, and it's terrible. But we accept it because we have to. The future of insurance has to change. There's no hype, there's no nonsense. It's just simply startups are too scared to do it because it's capital intensive, it's regulatory intensive, and it seems too big to do. So that's why you get all the startups trying to solve little problems along the way.
All right, so you say it's a must change, not a can change.
Winter is coming is an articulate way of putting it will change. Okay. The question I think you need to think about is more, will incumbents change? Will they work with startups to change? And can they, with all their legacy technology problems, their legacy culture problems, and just legacy everything?
Robin, you want to add something?
Yeah, I wanted to add one thing. I believe there is one group in the insurance industry that simply does not need to change. And this is if you are a seasoned CEO, 58, 62 years old, senior vice president, or lead of a large department, IT department in the insurance industry, only with a few years left for retirement. So why should you actually change and do all the hassle? Because to change the core of an organization from a product sales-driven insurance to a data-driven tech company, I think that's not easy, and it will have a lot of resistance. So out of the perspective from the current leadership, with exceptions, let me put it, we have great C-levels and VPs at some especially smaller insurances that are pushing it, but for the majority, long experience in this industry was once an advantage, and I think right now, especially when you need to change a lot, it's a problem. And what I want to say, why does it need to change? Because customers change. You already said it. I think no customer nowadays ordering its birthday present for his wife from the couch through Amazon or his food through Rewe in Germany understands that when he goes and buys an insurance, a non-physical product you cannot drive, taste, or take for a ride, that you need to fill out a paper form, wait 8 to 12 weeks until you get a reaction. It's an age in the internet industry, and there are examples out there that prove that it's possible. I mean, not only Lemonade, we have a letter, for example, from the US. They are 10,000 times faster in the application process because it takes 8 minutes and not 8 weeks. And I think when I heard the presentation in San Francisco a few weeks ago, it was pretty silent in the audience, especially where all the people from the life insurance sat.
I totally agree with that. It's a must-have, but in my perspective, from the investor perspective, what is not clear is there really a disruption coming up, or is this a corporation business model? Because the only thing you mentioned, fashion, you two, that's super easy to order. But the one thing that the corporates are protected by is regulation. And for you guys, I think it's a pretty hassle to build up a team. You need a lot of money, first of all, talent. You need people from the old industry, and you need a lot of money. And I would not say it's not working. I'm only saying it's. I'm not sure if it's really the disruption or the corporation model that will work. And especially in Germany, the market is not so big. In the US, we see that a lot of companies, they have right now their own license, Metromile, Oscar and other guys, Lemonade, I think. And the market is huge, but in Germany you have to raise a lot of money, you have to raise a talent. And hopefully we see the disruption from you guys, but from my perspective, I'm a little bit skeptical. Maybe when the older guys or the old corporates will change a little bit, a corporation model makes sense.
Now, what do you say to that, Samir?
I think it's a perfectly valid opinion, because basically you've got two models, right? You have the MGA model and you have the fully licensed model. So an MGA typically is a startup that's born out of an existing insurance company. So you'll have an AXA or Allianz or Ergo, whatever, right? And these guys will say, oh God, change is coming. And then they'll quickly hire a very good-looking 45-year-old head of innovation. This is what I've noticed. They're always 45 and head of innovation. And these guys will set up a little thing. They'll get a pool table, maybe a table tennis. You know, you can play some ping pong. And they'll basically make their own insurance company that looks like a startup, kind of smells like a startup, but is using their technology, using their license, and using their problems, inheriting the problems, right? And then you have other people who get their own license, who build their own technology, who do things their own way. And what, for example, in the example of us, you're absolutely right. Half of my team is from the old world, yeah? So we have like an ex-CEO from a traditional insurance company. We have our CFO is also from the traditional world, our actuary, our COO. They're all coming from that world, but we went and found the ones that are sick of that world, right? So they have the experience, they add the value. And so, for example, we have Munich Re is our reinsurer, yeah? So these guys can go and talk to them, and Munich Re can feel comfortable that when they reinsure us, they're not reinsuring some crazy know-nothing startup guys, right? But at the same time, the other half of the team are people like me who are thinking about the customer, who are thinking about the customer's experience, and who are thinking about how can we do this better, faster, and yes, it's capital intensive, but not that capital intensive. It's not. I mean, what's 10 million and what's 3 million? What's 4 million when you're trying to build an insurance company? It's all relative, yeah? If I'm making an app that shows you where you can find the best coffee places, then give me 50 grand and I'll build the app, yeah? If I'm building an insurance company, then give me 10 million, because that's the difference. And then the final point I would make to that is regulatory, yeah? We cannot underestimate the reinsurers and the regulatory bodies' desire to also be part of the change. So I would say it's actually not as difficult as you might believe. There are things that you just have to tick their boxes, and it's not hard to do.
Two things that I'd like your reaction on. The one point, because just to distill that a bit, one point was that like Robin's reaction maybe, you said that basically the big insurance companies with what they're trying to solve is sometimes a bit more, you know, it's a good start, it's a good try, but it's not a real startup. Do you agree with that?
Yeah, what I wanted to say is what you mentioned is don't underestimate the reinsurers. I think they don't care with who they do business in the future, and I have the feeling that they have a little bit better feeling that they can make a lot of business also with startups. So they're very friendly, and when you talk around, a lot of startups around the world are mentioning Munich Re, Swiss Re, Hannover Re, and I think they're doing a great job there. What I wanted to say about the cooperation, I think the cooperation between incumbents and Insurtechs is a temporary situation. It's like the strategy, you know, keep your friends close, keep your enemies closer. It's like you hug each other, but not because you love each other, but it's because the distance to the throat is less. So I believe if the moment comes and you guys are going to, or some other startup going to become a unicorn and really crash the market, I think all friendships are over. But it's interesting to see, and I think there needs to be, independently of strategy, a exchange of ideas, exchange of best practices between both, and both can benefit. And in the end, it will be like the Bundesliga, I think, or a soccer league. You always have certain clubs that are on top, and I think that we have some insurance companies that there will be new ones, and the Insurtech will establish themselves in the industry. They're already doing it, and I think that's for sure.
Timo.
Yeah, in terms of to become a unicorn, from an investor perspective, every investor hope that we have maybe one unicorn, maybe like you, in the portfolio, but the reality is totally different. When you see at, let's say, all startup, all 100%, 90% will die, first of all, in terms of lack of profitability. Secondly, they merge or they, I don't know, other things happen, they got acquired. And I agree with you. There's a 10% of all startups maybe become a unicorn or maybe can fundamentally change the industry. And for you guys, I can only say hopefully you are the one. But at the end, reality, a lot of guys say, okay, we are the Uber for, we are the Tinder for, we are the some kind of things for, and we want to change something. But I agree that some guys will show up. But for most of the companies, a lot of, let's say it like this way, a lot of companies would die because there will not be a business model for them.
Samir.
Can I just say just one sentence? I wanted to add, I totally agree, or actually I disagree, because maybe you won't see the companies around in 5 years, in 10 years, but you will see the people working nowadays at these companies. And when company one fails, they will start a new one, a new one, and a new one. So the ecosystem will produce unicorns. Maybe we see them don't right now, but it will produce them sooner or later. I'm pretty sure of that.
Absolutely. Okay. That was pretty much what I was going to say.
Sorry.
We all know. No, it's cool. We all know startups fail, and we all know it's not complete luck, right? It's about the team, it's about the execution, it's about timing, yeah? But you look at the ecosystem globally and how many purely digital insurers are cropping up all over the world, and it's more. You look at France, you have like El-Alami. You look at America, you have like Metro Mile, you have Lemonade, you have Oscar, yeah? You look at Germany at the moment, right? You have like this element thing happening with Finleap. You have Friday, you have Nexable, you have One, you have like, it's just more and more and more. I mean, look at China. China's a really good example there. They had a really poor infrastructure historically, which means now when they're trying to adapt to really modern ways of doing things, they're really good at it because they don't have to deal with all the old processes. So I think like the second biggest insurer in China is Zhong'an, yeah, which is 100% digital, 100%. And it was like an insurance company, and I think it was Alibaba. They just went, let's build an insurance company together, and it's the second biggest in China. So the question of will it happen is not a question. It will happen, yeah? All right. The question is when, and from a tech perspective, right? I think the future of insurance is about data. The future of insurance is data, right? The most valuable companies in the world are Facebook, Amazon, Google, etc. They're valuable because they own our data, which we give to them freely in exchange for services that we want. That was, you know what I'm saying, right? But then the future in like 5-10 years is behavioral and contextual data. Like I'm wearing a Fitbit right now, yeah? This thing knows my heart rate and knows how much I'm walking. I'm going to have a smart house. I'm going to have a smart car. I'm going to have a smart life. It's all going to be online. Who owns this data? Who uses this data? Who's capable of using this data? It's my currency. I'm going to want to give it in order to get a good service. And who do we trust with it? Insurance companies, banks, government, health, are all industries that provide terrible services to us at the moment, but they're also the industries we have to trust. So if somebody is building, maybe an insurance company today, maybe you. Maybe they're thinking about 5 years from now or 6 years from now being the most valuable company in the world because people won't have insurance policies singular, they'll have one insurance policy. This singular insurance policy will protect your whole life, and you'll give me all your data to do that. I'll charge you less, and I'll protect you more.
Because I saw some nods when you were saying data is basically what's going to be the most important thing for the insurance in the future, or like data is going to be the currency and what we use as the magic. Who do we trust better to do a better job at working with our data? Is it really going to be that the customers are going to trust the new startups, or is it more that if the incumbents innovate themselves, will they also be able to?
For sure. I think that was my point. That was a really good question because that's my point. These big companies, I don't care how much money they have, they simply can't do it. It's like the British. I don't know if anybody has been to London, but we have the Underground, and it used to be the pride of the world. Yeah. A train system under the ground. It was like one of the first ones, right? Or maybe the first one. And it was amazing. And it is now one of the worst ones in the world because everybody who has done it later has done it better because they've learned from us and they've made better things and they've also got new technology. We cannot shut the London Underground down and start again because the whole of the city would stop, which means we can only fix One little bit, which means we will never have the best train system in the world ever again. The big insurance companies are the same. They have not put technology at the heart of their business. They have done all this spaghetti code, consulting, hiring, just to make things just move forward one more inch. If they actually had to build, like actually stop their business and build a whole new insurance company, it would ruin them. Which means a tech company that can start from scratch and build everything is always going to provide better service levels, which is what customers want.
Well, the thing is, I fear I need to agree because...
I thought you wanted to disagree.
No, it cost me some clients in the future, but... so, there are, the counter-argument is, that it's a 4 trillion euro industry, and in Germany it's a 200 billion euro industry. And there are a lot of large IT budgets and budgets that claim to be for the digitalization of the business. But if you have a close look for what is the money actually spent, you will see that 99% is spent for maintaining and developing legacy systems. With there's a whole ecosystem of consultants focusing on legacy systems that come from the 1970s. Silos and all the products and services you guys are mentioning are simply not possible with these systems. And only a fraction is spent on innovation. If I see that in 2016 only 80 million euros was invested into the German Insurtech scene in a $200 billion industry, you see that, that there's still a lot of room for improvement. Yeah, I think, but as I said, it's like the Bundesliga. We will see also some positive surprises from the incumbents. There are some people working on great stuff also inside insurers, but it's mostly driven by young, dynamic CIOs or CEOs. And so you will have some resistance.
Before we open up for a few questions, I want to open up the field maybe to Timo again, because in Insurtech we've been talking a lot about completely new players, but the field is not just about completely new players. So as an investor, with your view of the market, what are some of the other models that you see that you think have a big potential in either being a disruptor for the industry or being tools which the incumbents can use to innovate?
Like I said, I brought up the cooperation model, and we see companies right now who are not, by definition, insurtechs, but they provide a piece of the value chain that they can change for the industry, for the insurance companies. For example, OptiPay I worked for. It's Apeiron. When you have a claim, you get your money from an online platform. That's super cool. You can use different vouchers. Also, that's what I meant a little bit when I talked about corporations. That's in terms of investments, an easier field because startups focusing on one piece of the value chain of this whole insurance industry and make it better most of the time from a user perspective. And in terms of risk, from an investor perspective, that makes more sense for us right now to invest in. But like I said, we will see some new guys, some unicorns, some disruptors, and hopefully I put also some money into these guys. But the cooperation model from an investment perspective makes totally sense now.
One more little different question, because I mean the need for innovation, I think we've been discussing a lot, it comes from we want better products as consumers, but then again, insurance is a lot of the times not a very emotional topic for us consumers. So what needs to, or what do startups need to focus on so that they can catch new customers, that they can actually be as excited about insurance as you are, because I think most people aren't.
To be clear, insurance will never be a sexy product. I'd love it to be, but it's never going to be a sexy product, yeah? And I'll be honest, before I started looking into insurance, I wasn't excited about insurance at all. It's just, I'm one of these guys that as soon as you look at a big industry and you start to see the problems, you're like, my God, the opportunity for improvement is gigantic.
All right, that's the gong.
So is that for us?
I think so. I think
cool. So I guess very quickly, I mean, my background's in marketing actually as a CMO, and acquisition of users is actually one of the biggest problems for the insurance industry. They're paying like €300-400 per user. Okay. So we have a model in place where whether it's working with brokers, whether it's going direct, and the one thing I would say when you go direct is don't underestimate customers' needs. So I would say for us, signing up takes 3-4 minutes. Making a claim can be handled in 24 hours. Everything's 100% online, and you're not locked into a 12-month contract. When you put that beside a big insurer with a big brand, all they have is their brand, because they will fail at every comparison against us. So maybe a 60-year-old person who's been with the same broker since they were 24 years old and always been insured by one insurer isn't going to change, and that's okay with me, but just everybody else will.
Before we get kicked off stage, do we have time for a question or two, or no? All right. Okay, if somebody does somebody have a question? Let's ask us first. Yes, one question, one quick answer, or 3 quick answers. The hot seat.
Hi, Jacek Łubinski, expert of Venture Fund. I have a question to Timo and to Samir. Do you see a funding gap in Insurtech at any of the stages?
Thank you.
Can you speak up?
Do you see a funding gap?
Okay,
in any of the
in terms
stages?
of funding, in my perspective, there's a lot of money in the market. We have 2 big players, and that's why also the valuations are getting a little bit crazy. First player is, like myself, VCs. And for us, we have to see also a very clear exit market. It's very difficult because sometimes the exit market is only to corporates, and you see the corporate VC arms. They pay, in a lot of cases, more a higher valuation because they have a strategic fit with the business model. And in my perspective, there's a lot of money in the market, and a lot of new VCs showed up in the last couple of months. And for me, literally, there's a lack of deals, not a lack of money.
And I guess from the other perspective, I would say it depends on the VC you're talking to, yeah? So some of them are super cautious, and they're just trying to make a short-term buck, right? And then it also depends which country you're in, which continent you're in. It's still the case that if you go to the US, it's a lot easier to raise money, and they'd rather go big or go home. So it depends where you are, to be honest. Yeah.
One more quick question I see.
Yeah, kind of from the user perspective, if you have a startup, like an unknown brand, what's about that kind of trust that insurance kind of startups should build versus those kind of big companies already on the market, and people may be not afraid to buy the insurance with them?
Cool. So there are 2 things. So one is when you're a startup, you're not trying to literally compete with Allianz or AXA or Zurich, yeah? Because you're not going to have as many customers as them. You need to prove that your model works, which means you need a certain number of users. So it's not like you need 1 million, it may be that you need 10, 20,000. With insurance in particular, trust is actually only built, this is the really difficult thing, when people make claims. Because you can sign them up by showing that you're regulated, by showing that you have a reinsurer, by showing that you've raised lots of money, and by showing a really good product. However, trust is only built when people make a claim and you pay the claim. And then they're like, wow, this service is really, really good. And then it's like, I want to recommend it to my friends, and I want to be able to grow. So it takes a little bit of time, but the reality is there'll always be young people especially, and early adopters who are willing to try these new products.
All right. I think one more quick addition, and then that's it.
Yeah, well, I think when it comes to trust, maybe it can be an advantage that your brand is unknown, because insurance brands belong to the most untrusted brands that there are. There are studies on that. Only after the financial crisis, the banks became worse. But that's, of course, a little bit a joke. But I think you're totally right. That's a big issue. But it can be an advantage if you're fresh and you tap into some sort of design you're new. That can be also an advantage.
All right. Thank you very much. Thank you, guys. Thank you, Samir. Thank you, Timo. Thank you, Robin. I think this was a great introduction and dive into Insurtech. Thanks, guys.